Palantir just made history. The company just got listed on the S&P 500. But there are some huge things about this that literally 99% of you are not thinking about, and these will greatly affect Palantir's future. Should you worry about these? Well, the answer is more complicated. But what am I even talking about? Well, let me explain. Disclaimer. As you may already know, Palantir just shocked the tech sphere by getting listed on the S&P 500. Them, along with several other companies, are now celebrating this victory. After all, Palantir has constantly received attacks and criticism from doubters. And this time, they proved them wrong. But here's what's even more exciting. Palantir's price jumped 8% in the after-hours trading. But this is just the tip of the iceberg. There are far more complicated things that could happen to Palantir. This listing is going to change everything. Aside from the potential price change, there's a barrage of exciting things and other changes that you need to watch out for. And here's the catch. You're probably one of the few people who'll learn about these. And this will be a great advantage to you. So stay tuned, and let's get into it. One of the things that could happen to Palantir is an increase in options trading and hedging activities. What are these? Options trading lets investors bet on the future price of Palantir without directly buying or selling the stock. Hedge funds and large investors might use options to protect or hedge their investments. For example, if they own a lot of Palantir shares, they might buy put options that would make them money if the stock goes down. This protects them from big losses. This can be good for Palantir because options trading usually increases the stock's liquidity. That means there are more people actively buying and selling Palantir, making it easier to trade. So what's the effect of this to Palantir? Higher liquidity often helps stabilize prices over time and can create opportunities for growth. More hedging can also attract cautious investors who see Palantir as safer due to the increased options available for managing risk. However, there are also huge downsides to this. Heavy options trading can lead to short-term price swings. For instance, if many investors suddenly buy put options because they expect the price to drop, it might create negative pressure on the stock, causing the price to fall even if Palantir is doing well. Some people even think this could happen to Palantir soon, since a lot of investors want to ride on Palantir before it shoots up in price. This can confuse the market, leading to volatility that doesn't reflect the company's actual performance. And this isn't something that's only seen in theory and books. This happened in real life. A good example is Tesla. After it was added to the S&P 500, options trading skyrocketed, leading to a lot of stock movement. At first, this brought in more liquidity and investor attention, but it also caused Tesla's stock to have big swings, partly due to large-scale options trading and hedging activities. The increased volatility made it harder for some investors to predict its short-term price changes. Another major change that Palantir could experience is an influx in analyst attention and scrutiny. There's a huge chance that more financial analysts will start covering the stock. These analysts work for big banks and investment firms, and their job is to study companies and make predictions about their future. This can be good for Palantir because when more analysts cover the stock, it can attract a wider range of investors, especially big institutions that rely on these reports to make decisions. More positive analyst reports can also help push the stock price higher and boost confidence in the company, which is great for Palantir's public image. But as big as the good that they can bring, they can also be a threat to Palantir. This can get Palantir in hot water. After all, some analysts can be really demanding. If Palantir misses the high expectations set by analysts, the stock might drop even if the company is still doing well overall. Negative reports can cause panic among investors, leading to quick sell-offs and increased volatility. But here's what's even scarier. In some cases, even news that's not completely verified can destroy the image of a stock. Imagine having your portfolio getting burned due to false news. Hopefully this won't happen to Palantir. On top of all these, Palantir might also feel more pressure to meet short-term targets just to keep analysts happy, which could affect their long-term strategy. How does this make you feel about the stock? We'd love to hear your opinion. Lastly, and personally, another potential change that might come to Palantir is the type of investors that would be interested in the company. Right now, Palantir is still held mostly by retail traders. Institutional ownership is still at around 42% currently, but this could change soon. Right now, many of Palantir's investors are interested in growth and tech. But since it's now the S&P 500, more conservative long-term investors, like big pension funds and index funds, will start buying shares. These investors are less focused on short-term growth and more interested in steady, stable returns. And for those who prefer low-risk investments, this might be good news. Why is this so? If the majority of stock ownership shifts, it can be good for Palantir because it can bring stability to the stock. When large, long-term investors buy shares, they tend to hold on to them for a long time, which can reduce volatility. The stock might move less wildly day to day, and that can create confidence in the market. But for those looking to make a quick buck, they might not like this. These new, more cautious investors will expect steady performance and might not be as tolerant of Palantir taking risks or making bold moves for future growth. If Palantir's growth slows down or they try something innovative that doesn't work out immediately, these investors could quickly sell off their shares, causing the stock to drop. In fact, the exact same thing happened to a tech giant. When Nvidia was added to the S&P 500, it experienced a shift in its investor base. Before inclusion, most investors were tech-focused and interested in Nvidia's rapid growth in areas like gaming and artificial intelligence. But after joining the S&P 500, more conservative investors, like pension and index funds, began buying Nvidia shares. So what happened to them during those times? Nvidia faced higher expectations to deliver steady, predictable results. When Nvidia had periods where its growth slowed, especially in areas like chip demand, some of those new investors became nervous and sold off their shares. And this led to temporary drops in the stock price. The pressure to meet the expectations of a broader, more cautious investor base changed how the market reacted to its performance, even when the company was still innovating and growing. But on the other hand, the new long-term investors brought stability to the stock. This has helped reduce some of the extreme price swings it had before they got listed on the S&P 500. It also helped boost Nvidia's market reputation as a more established, reliable company, which attracted even more institutional interest. All in all, Palantir's listing on the S&P 500 has brought a high level of excitement to the stock. In the coming days, there could be huge swings in its price. One user on X voiced concerns about a potential bull trap forming for Palantir. They think Palantir's stock could fall as low as $28, even though the company just hit a major milestone by joining the S&P 500. At first, this view might seem overly pessimistic, especially given how much attention and positive sentiment Palantir has gained from this event. But here's what's interesting. There could be some credibility to this prediction. Sometimes after big news like a listing, many investors rush in to buy, driving up the price quickly. But once the initial excitement fades, some investors, especially those who were looking for a quick profit, might start selling. This can cause the stock to dip. If Palantir doesn't immediately deliver strong results that match the high expectations of new investors, the price could see a temporary pullback. Moreover, some long-term investors might be cautious, waiting to see how Palantir performs in the next few quarters. If there's any sign of slowing growth or challenges in their business, it could lead to more selling pressure. However, always take these predictions with a grain of salt. No one can accurately predict where Palantir might go. But what do you think about this? Let us hear your thoughts in the comments. If you are curious to find more, then make sure to click on one of the videos you see on the screen. And with that, we come to the end of this video. If you enjoyed the video, please like this video, and don't forget to leave a comment in the comment section. This really helps me with the YouTube algorithm. Also, please share this video with as many people as possible. Let's get this news out there.